right. So in our last episode of Point of Interest, I mentioned about some supporting tools or indicators, and I told us I was going to be explaining indicators and divergence, right? So indicators, so RSI, MACD, divergence, they're very important, and so I'm going to just open it right away, and then two major indicators that are sacrosanct. So we're going to have what we call momentum indicator and trend indicators. So we have two momentum indicator and two trend indicators. There are many of them, but I'm just going to give you two simple ones. So first, we're going to use a 50 moving averages in MACD. Then you can use Ichimoku cloud in MACD and use moving averages and RSI. So let's first try MACD. Now, for you, if you go to your trading view, you're going to go to indicator and look for MACD. And then that's MACD. And going to be read moving average divergence convergence. And that you're going to put. The next, you're going to go for EMA. That is moving average exponential. So these two are the combinations. Now, you're going to go to your setting or your trading view. All right. And then you go to the settings. So in your trading view, you're going to see settings. All right. So when you go to settings, you're going to go to style. You go to, I'm on another one. So you go to your settings, you're going to length to 50. And of course, style, just put in any one you like, any color you want. So mine is blue, and then I'm done. Now, if you like, you can put 200 moving average with it. That is if you want to say scalping. If you're not scalping, if it's your normal day trading, and 50 moving average is okay. Okay, so then without that, you're going to add, you go to your MACD. I reset my own MACD. So normal MACD does not come the way mine comes. Normal MACD comes this way. Right, so this is how the normal MACD comes. But of course, that you can use that way too. That can be easy for you to identify the market. And of course, more momentum, that is volumes adding up to the selling pressure. You can see this is gold is selling massively. So there was a divergence. Okay, so there was a divergence. So I changed my own. So you go to settings, and then on the settings, I change my own. You go to style, I remove this histogram, and then come to this MACD. I change it to columns, and then I put the color I want. So you can see color. So I put the color I want, and that's all. That's all you need to do. So you're set for this. Now, I talk about divergence. Oh, excuse me. So I talked about divergence. So how do you trade divergence and all of that? Now, what shows you divergence is actually the momentum indicator. All right. Nevertheless, your key levels are marked. You have all the necessary stuff. Now, this is 1 hour time frame. We already know some basic things about the uh, point of interest and all of that. One of the major one talked about the what's it called? Um, Fibonacci retracement. And so if you look at this is a high of this market. So I drag to this point, and you see that the market rejected at what's on? The market rejected at market rejected at what's going on here? Sorry. Market rejected at 50 retracement level. So which the market will be selling, continue selling. That's what it means. Now, and I told you why I marked this point 23.5. That's where used to be my target for take profit on a normal day. Now, so one of the conflicts that even though here too is, remember, aspect of fair value gap. So here is a complete fair value gap. So didn't fill all, but 50% was filled. That's what it means. Now, look at divergence. So ordinarily, what happened prior to this time was that the market, the volume, that is momentum, was showing what? A higher low, a lower high. This is a high. This one lower than this. But what happened? The market was showing a higher high. That's a divergence. Okay, so probably I'm going to do 30 minutes to see properly. So market continue to go up. Why the momentum is already showing a bearish momentum. So that's a divergence. You have spotted our divergence there. And so you want to have a break in the market. All right, so if you go to 15 minutes, you're going to find the same thing. So market is proving to be returning up. Why? The market is already showing a different thing altogether. So now, outside that divergence, of course, you use the indicators to identify, okay, possible entry level. Like I told you about 50 moving average. Once you are trading, market is below 50 moving average or it's above 50 moving average. What do you want to be looking for? You want to be looking for buying opportunity. Now, if it's going to be trading on 5 minutes, 15 minutes, 10 minutes, 3 minutes, 1 minute, there's going to be a need for you to add 200 moving average to it, right? So that you can identify. So here, you could see the market, but you're working with structure. However, here you have this 50 moving average. So it's possible here when the market has closed with a candle below 50 moving average. So this is 15 minutes. You're looking for a buy or an opportunity. Now, assuming you have sold here, short here, this is an engulfing candle. You want to return. That's a, what do they call it? You want a touchback, a rejection, which is here, for instance. Now, this is the thing. Your stop loss is going to be the previous high, and then 1:2 risk reward. This end up in a swing trade because this is gold. So 1:2 risk reward, you're okay. Now you see the market return back in, because if you put the stop loss here, you eventually stopped out. So chances are there that you could be stopped out. Now, go to 5 minutes. Maybe it will help you more. So let's look at it. So here, in 5 minutes, this is 50 moving average. You have a candle close. You want a touch back. The touch broke, so that's not your thing. You want to touch back, that's not your thing. Okay? Then there's a break. You want to touch back, that's not your thing. Right? So this is a break. You want to touch back and a rejection, that's your thing here. So here you have the market touch back here, and then this is a rejection after break and close. So this is a rejection. So this rejection is your entry. So that is to say, you are looking for a short position. So after this rejection candle, your stop loss by above here. I always put my own above this point. And 1:2 risk reward. So it's done. So this one again, Okay, you have a rejection here, you short, you are likely going to be stopped out of this one. Then the market rally back up of 50 moving average. Now, this is now where the momentum help you. This is where momentum help you. So what do you use it for? Look at it. A crossover is an indication of buying. And then you have a cross down. So this is another cross. Most time, a cross that make more sense, a cross that have a good distant. See this cross, you wait for a return. Don't just enter when it crosses. Wait for a return. So return back to 50 moving average. It's now your entry. MACD crosses make a lot of sense. So once MACD have crossed, they're actually finding a trade. They want a candle close, at least a close candle below 50 moving average, this candle. So their entry will be here, right after this close. Then their stop loss is here, which is still very big. That's why you go to a lower time frame, because if you're scalping gold, but if it's another instrument, that's not an issue. So look at it here. Now, if it's another instrument, perhaps let's look at GU, EBP, USD. It's GU. It's D. So this is a cross over the market having an equal high come to sweep the liquidity. So when you have an equal high price action, smart money concept, we wait for a strip of liquidity. But this is the point. There's a cross here. Here is okay. This is stop. Let's this one. So you want to move away and then return. Nothing happen like that. So now sometimes people wait for this normal close, but that could take a long time. Okay, so you use MACD when the cross of MACD in your price action line want to take a trade. So this can be done in 3 minutes equally. So, but you can know that when you're on this small minute, you're actually scalping 1 minute. Perhaps when you are using free TradingView, you may not be able to get 2 minutes. So you look at your MACD cross here. So that means ordinarily, this is stop. Well, a candle close below. And then you see your MACD, there was a divergence. So you're making an entry on your MACD. Then let's take a one. Put this one and allow the Chimoku cloud to be there. Chimoku cloud. So let's go back to 15 minutes. The market is definitely a bearish market. You understand? It's definitely a bearish market. So by market price actions on the SMC, you have an equal high here. You want to a sweep of the liquidity and come down. And after sweep of liquidity, even with engulfing, you have taken an entry here. So market is moving. Then the Ichimoku cloud begin to show a bearish trend. And this is the confirmation. This is the confirmation. Now, if you look at it, this trend want to rebounce, but the Ichimoku cloud is static. You have a crossover here. So let's pick in another one. Let's take out the MACD. Then you want to put in RSI. The RSI, you can reset your RSI by taking off those background. Maybe you want to change this one to something else, or you want to make it a little bit thicker this way. Okay, so your upper limit, maybe you want to turn it to red and something like a line thicker, and then so that you can see it properly. Or something like this. If you want to make this one, call it thicker, and possibly so it's black is okay. You want to make this one green, and of course a bit thicker. You want to look at it. You want to remove the background. You want to remove all of the settings. And then I think you're good to go. So ordinarily, using your RSI, all you're looking for is overbought, oversold, but not just that, but you want to see the activities. Okay, so let's return back here because this is not, I need to change it to line. So already there is only overbought. You actually want the market to cross over, but that's where you are now checking along with your price action. So above this, because Kappa will have entered. Well, let's do the 1 hour probably to see it more. Consider you are still in a downtrend. Invariably, the market will still sell. If you go to your 1 hour, you take your from this high to low. So that you're looking at this point. That the market should come to and then reject for a sell. So it's only smart people that are actually very strong in analysis who want to buy because they understand that the pullback may happen. And then for you, you are going to be careful. You wait for the market to get to appropriate quarter for you to sell. Why do I want to sell? You are literally below the Ichimoku cloud. That is the momentum is downtrend. All right. And if you see change from Ichimoku cloud, right, take it off and go to your 50 MA. You are below your 50 MA. So every time you are below 50 MA, you are waiting for a pullback to the 50 MA or close to the 50 MA for a sell. Look at it, a sell here, a sell here, a sell here, a sell here. Can you see that? Now, this was the beginning of the breakthrough. So after all the market move, it's a major sell, major sell, major sell, another major sell. So another major sell is coming now, gradually coming up to this side. Then you have a rejection there, then a major sell will come. That's exactly what you're doing. And then, of course, your RSI already told you that you're still in a downtrend. All right, so that is the RSI may return almost close to this point and reject. Look at just like this rejection. And look at this rejection. Look at this rejection. Look at this rejection. All right, so that's one of the things you will need to pay attention to in your trading because it's very, very important. Because most time people tell us, because I just want to find a trade. So you have to be patiently waiting for a trade. All right. So when you patiently wait for a trade, when it comes, you will see it, you will know it, and you're able to take it. So you can see this two, this a rejection, and that's a very massive sell, right? So, and of course, you have confirmed with even your, what's it called? Your Fibonacci retracement, that giving you a very massive sell from that point. So using indicator, and then you can identify some level of divergence and all of that. All right, so let's cap Bitcoin. And so all of this true. BTC. Okay, so BTC now is below 50 moving average too, but it's striving to move up because you have your key levels here, here to here. You can see when it got to this point, create a massive bounce. But I think this is a kind of level of rejection. And then if you take your Fibonacci retracement from here to here, now this is already a rejection at 50% retracement level. So probably you expect this market to come back to this point, break this, and probably, but if it does not, then maybe preparing to move up. No, but practically speaking, you're still in a downtrend for a time being. And that's exactly what you were doing. So look at it. So when there's an overbought, so this has not gotten down properly. So you're going to have something like this. And then, so that's one of the things you have to pay attention to while you're doing your activities. Is very important. This market is an uptrend, right? So it's an uptrend, but you can have a massive pullback, as it were, but still had a bounce from here. So this is a 50 moving average. You have a crossover here, and perhaps sometime I said once the market break, you wait for a retest. That retest, you can see that all this point was already overbought. But there's a level of kind of divergence here. The market was going higher, while the RSI was going lower. So here we have this overbought, came back, bounced from the 50 level, overbought, came down, of course, below and strive up as fast as possible. Got a very massive dump candle. Then we have a jump on the market again. So from that probably here entry, but I think you can see that this market is very volatile. So getting in here, put your stop loss here because this is currency doesn't really have too much energy. Okay, and then if this one bounce up here, you're targeting here, and all of that because at that point can do come to overbought and all those like. So I'm just trying to simplify all of these things for us so that we will not have issues, and then we can always stand to identify opportunity when they come and present themselves. The same thing, you can see Euro USD. This is a massive crossover here. Oh, crossover here. Now, so at the crossover here, you want to retest. So very possible this is a rejection. You have entered here, your stop loss above here, or even above here. So that means at that point, you've done this. The breakthrough, the test, then your stop loss can even be above this last one. How much? 51 pips. So 1:2 risk reward minimum. Your target here. Now what happened, Felix? This market continue. Return back up here, you're afraid. You don't be afraid. You have to be bold. Then these are rejection. You can add positions if you like. You see that? Can add positions. So that means you find another. So, but this is like going to be like an intraday because this is a swing, almost a swing trade. You're looking at this is 1 hour time frame. So your stop loss again now can be above this one. So above this one, 1:2 risk reward. Well, you can see when I tell us that when you find an instrument that's making sense, you follow it. Another one, come over. So this one is already closed. This one's already closed. Another one. So here, you sell, but this is still the test. Rejection, the close of this rejection, and stop loss. Well, so stop loss can be about just here. 1:2 risk reward. It's done. You're waiting for another selling opportunity. So we're here. Be close, but this time around may take up almost up to that point. Because if you look at it now, Fibonacci retracement level, take it here to this point. So you can see that it may come close. When it comes close, what you want is a rejection at that point. And this one too will be rejected at that point. So what you're looking for, rejection at this point, then you're looking for a selling opportunity. You understand? Because it's a downtrend. So you have to understand this can work for you if you pay so much attention. GBP, USD, we're talking about when it returned back up. So it's gradually coming up. So once it come up, you're going to be looking for a sell. Okay. Let's look at XAU again. Good. Okay, so XAU have come here, you have sold, you are making a lot of money because XAU, when it comes, you have to refine to a very lower time frame because it's very volatile, has a lot of volumes, can play around so long and all of that. So BTC, yeah, this is it's really proving stubborn. But that's a rejection. Then you have put your stop loss, but this also won't be too wide. Okay, so which other one? BNB. BNB will be bullish. Yeah, I'd say that. I know once Bitcoin is struggling down, BNB will be bullish. All right, so let's go. Which other one? Can check on and on and on and on. SNT, JPY. Okay, so then this is a break, this is a rejection. So then this one's supposed to be a sell. Another thing I always tell people to observe is that you have to observe this is a sell already, rejection engulfing. So this is sell already. Your stop loss can be moved to previous high. Man, this is too big. Yeah, so because this is 76. So if that's when I want to enter the trade, let me go to 0.05 perhaps. And I entered and I put my stop loss. You understand? I put my stop loss. So if I like, I can extend just looking at the gap that I could cover down here. Okay. 1:2 risk reward. So I'll put my stop loss. My stop loss 88.640. 88.640. $25. My take profit 86.294. 86.94. $51. Confirm. Then allow it to be. You hit your stop loss, you lose. You hit your take profit, you gain. Simple. No struggle. But you don't just do this because you want to do it. You do basic analysis. And then, but this is the early break. So you could have issues. Maybe when it's going, can come here again, return up and all of that. Right. So because, this one, okay, kind of close. This is not too nice, perhaps. Okay. EBP, AUD. So, okay. Okay, this is a nice one. Maybe PUD. So we get to a key level. So sometimes, of course, you know why you mark your key level is that market come there and retest and then start coming up and all of that. You can see your RSI. So it's bouncing consistently, bouncing and all of that. Okay. But of course, you want to go to a lower time frame to see all of those things playing out before you could find an entry. So I'm not going into much detail about all of these things. I told you this one need to come up before the rejection. USD JPY. So USD JPY is still trending up. So the RSI probably crossed the 50 again. Because this is a sign of rejection or retest. So USD JPY is supposed to be buying, but I'm not buying because I've already taken a position. AUD USD still struggling. I told you. G selling. Okay, so nice one. This is a retest back to this point. Though we have a double top there, and then you have this to this point. For bias is bearish, so that is to say markets should be selling. So let's look at 4 hours to see how massive bearish. Yeah, I think the market just a kind of choppy kind of market, as it were, sideways movement. So but it should be selling anyway. Do you understand? This should be selling. Okay. And so if we will conduct handling theory, we're going to find here the candle theory. Right. So here, like this is trading, not training. Okay. You have to understand. You want to have more confirmation of your confidence. You want to allow this candle to close for the new candle in the next less than 1 hour. So the next 30 minutes. And then I will close within this range. But you know, you'll use your 4 hours. This is a downtrend. And then you're already in the market though. But some want to wait to see this candle close within that range. And then they're good to go. But I've told you this was a rejection already. Then you're supposed to be selling. And sell, you can target this point and put your stop loss above this 50 moving average. And that means you're good to go. So that is to say, as at the time we came, we saw the market somewhere here. And then we'll put a stop loss over there. That's about 16 pips. And then targeting 1 ratio to risk reward. Then if it's not up to, let's look at it here. So 1 ratio to risk reward. All right. That should be selling. So let me just do a very small, tiny kind of right. So sell it. Then put the stop loss, as I said. So let's go there. Okay. We'll go back to the stop loss. We put it 65,821. 8. Then take profit. Take profit 65,304. I'll forget it and go away. Right. So you don't stay with it. Probably you only come back at interval to check what the market is doing. None of that. Okay. So GBP. No one is struggling. They want to come here. Actually, really bad. BTC. You see what I told you? That's selling. at least down to this point. So if you have entered here, your stop loss above here, targeting here, you'll be money eventually. All right, so that's one of the first things I have to tell. So over time, I'm going to tell you, teach trading with scalping with 5 minutes, scalping with range of 15 minutes, taking trade in 5, 3, 2, 1 minute. All right, what to look out for in taking entry in 5 minutes, right? What to look out for taking entry in 5 minutes. So I'm going to be telling us that in the next episode of our trading. I hope this had helped us to understand. So there are more to say, there are more to teach about the 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 indicators and all of that, but not dwelling so much on indicators, just to give you kind of a high effect towards your trading and to see how it's going to add value to you and reduce your stress of trading. All right. So thank you very much. You have a nice time. Bye.